Hi everybody, I wanted to work this problem with you, and I'm going to do it with a T account. I'm also going to refresh how it might impact the accounting equation. It's just a different visual of it. It's the same information as if you did a formal journal entry, just multiple different ways of viewing it. So let's do this. So the beginning raw materials was $62,000. During the month they purchased another 104. So those two together are total materials available for use. And they tell us that they used 38,000 of it for indirect, and the total that were requisitioned, fancy word for requested, from the storeroom, which is where materials live, for use in production. Production is over in work in process. So this would have been a total of 138, of which 38 of it was indirect. All right. And so it is this direct that is put into, this goes to work in process. Or we can make a work in process T account, but in your work, this number, direct material used, always matched the direct material used that was populated into work in process as manufacturing costs added during the period. And then, of course, they didn't ask you to compute it, but you could compute your ending down here. Your beginning plus your purchases minus your 138,000 used would give you your ending here. What about the accounting equation? We haven't talked about that in a minute. The purchase, what would have happened? We would have reduced cash, unless we bought it on credit, and we would have increased raw materials, right? So that's what it looks like in the accounting equation. That's what it looks like when you did the journal entry. You just did it with debits and credits. What about what we just did? Now we're reducing raw materials and increasing work in process. It's moving from one place to the next. The used indirect is a little bit more complicated because all your indirect costs, your manufacturing overhead that's incurred are collected in that temporary account called manufacturing overhead, and it's compared to what's applied to work in process to get the over and under, and then the over and under actually goes over here in cost of goods sold. Let me make a note of that for you. All right, I wrote that out there for you just as a refresher. What happens when you finish the job? Now it's going to come out of work in process, whatever the amount is, and it wouldn't just be material used. It would be material used and labor used and overhead used, less the stuff you didn't finish, right? And plus the beginning work in process gives you your cost of goods manufactured or cost of goods made, which leaves work in process and goes over to finished goods inventory. Maybe I should have the full proper name here so we don't get confused. Of course, all of these are inventory accounts.